Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are mixed today. Dow Jones is down 0.4%. NASDAQ is up 0.4%. S&P 500 is flat. Russell 2000 is down nearly 1%. Crude oil is up $1 to 63. Yield curve is up 567 basis points. And we're going to talk about why. You can see on the heat map, Oracle is down again 4%, Microsoft up 2%, Apple up 2%, Tesla is up 6%. Everything else is pretty much down. Let's read the daily article. Wall Street subdued after record highs, on track for weekly gains. Wall Street's major indices were subdued in choppy trading on Friday, easing from the previous session's record highs, but they remained on track to log gains in a week of economic reports that solidified expectations for interest rate cuts. The Nasdaq briefly hit an intraday record high on Friday. On Thursday, markets were boosted by a rally in shares of Tesla and Micron, while the monthly inflation report kept the U.S. central bank on track to cut rates next week. Traders were already pricing in a 25 basis point easing in monetary policy after a series of recent indicators had shown that labor market was worse than previously thought. The bleak August non-farm payrolls, however, brought up bets of a bigger 50 basis point cut that currently stands at 7.5%, CME FedWatch tool showed. I don't think there's any chance of that. After the inflation data, market pricing now reflects expectations for 3/4 point cuts, one at each remaining Fed meeting this year. We'll see about that. Quote, we're likely going to see 75 basis points one way or another this year, and likely another 50 to 75 basis points over the next 12 months. I don't know. A preliminary reading of the University of Michigan's Consumer Sentiment Index for September came in at 55.4 compared with estimates of 58. Declines in communication services sectors, including Alphabet and Meta, offset gains in the heavyweight tech sectors on the S&P 500. Energy stocks on the benchmark index were higher, tracking near 2% surge in oil. Meanwhile, losses in industrials and consumer discretionary stocks weighed on the Dow. Nevertheless, all three major indices are poised to record weekly gains, largely helped by a revival in AI trade after cloud computing giant Oracle's upbeat forecast on Tuesday. It sparked a rally in AI-linked semiconductors and utilities companies powering data centers earlier in the week, setting up the S&P 500 information technology sector to outperform peers this week. The indices are in positive territory for September so far, a month that is deemed bad for U.S. equities historically, where the benchmark has shed 1.5% on average since 2000, data compiled by LSEG showed. Among stocks, Warner Bros. Was 9% higher, extending Wednesday's over 28% gains, as a source said Paramount Skydance was preparing a bid for the Hollywood studio. Microsoft rose 1.2% after it reached a non-binding deal with OpenAI to allow it to restructure itself into a for-profit company. Wow. Supermicro gained 4% after the AI server maker began volume shipments of NVIDIA's Blackwell Ultra systems. I kind of want to read about that. Microsoft OpenAI reached non-binding deal to allow OpenAI to restructure. Microsoft and OpenAI said on Thursday they have signed a non-binding deal for new relationship terms that would allow OpenAI to proceed to restructure itself into a for-profit company, marking a new phase for the most high-profile partnerships to fund the ChatGPT frenzy. Details on the new commercial arrangements were not disclosed, but the company said they were working to finalize terms of a definitive agreement. This marks a step forward in OpenAI's prolonged talks with Microsoft as the former seeks to raise capital under a more common governance structure and eventually go public to fund AI development. Microsoft invested $1 billion in OpenAI in 2019 and another $10 billion at the beginning of 2023. Under the previous agreement, Microsoft had exclusive rights to sell OpenAI software tools through its Azure cloud computing platform and had preferred access to the startup's technology. Microsoft was once designated as OpenAI's sole compute provider, though it lessened its grip this year to allow OpenAI to pursue its own data center project, Stargate, including signing $300 billion worth of long-term contracts with Oracle, as well as another cloud deal with Google. As OpenAI's revenue grows into billions, it is seeking more conventional corporate structure and partnerships with additional cloud providers to expand sales and secure the computing capacity needed to meet demand. Microsoft, meanwhile, wants continued access to OpenAI's technology, even if OpenAI declares its models have reached human like intelligence, a milestone that would end the current partnership under existing terms. OpenAI said under current terms, its nonprofit arm will receive more than $100 billion, about 20% of the $500 billion valuation it is seeking in private markets, making it one of the most well funded nonprofits, according to a memo from Brett Taylor, chairman of OpenAI's current nonprofit board. The companies did not disclose how much of OpenAI Microsoft will own, nor whether Microsoft will retain exclusive access to OpenAI's latest models and technology. Regulatory hurdles remain for OpenAI as attorneys general in California and Delaware need to approve OpenAI's new structure. The company hopes to complete the conversion by year's end or risk losing billions in funding tied to that timeline. Microsoft and OpenAI compete on products ranging from consumer chatbots to AI tools for business. Microsoft has also been working on developing its own AI models to reduce its dependence on OpenAI's technologies. Let's switch to Donald Trump. Trump says losing patience with Putin eyes bank oil sanctions. US President Trump said that his patience with Russian President Vladimir Putin was running out fast and threatened Moscow with new economic sanctions as efforts to broker ceasefire deals with Ukraine have faltered. It'll be hitting very hard on with sanctions to banks and having to do with oil and tariffs also, Trump said Friday in an interview on Fox News. Still, the president insisted that he had already done a lot to punish Russia, noting expanded tariffs he placed on India for purchasing Russian energy and argued that this is a Europe problem, much more than our problem. Russia on Friday said negotiations with Ukraine were on pause, despite Trump's push following a meeting with Putin last month for direct talks between the Russian leader and Ukrainian President Zelensky. Communication channels exist, they're established. Our negotiators have the opportunity to communicate through these channels, but for now, perhaps we can talk about a pause, Kremlin spokesperson told on reporters on Friday. Moving on to consumer sentiment. Consumer sentiment drops in September as Americans anticipate job market risks. U.S. consumer sentiment continued to slide in September as Americans worried about jobs and inflation. The U of M preliminary survey of consumers showed that overall sentiment dropped 55.4 in September, a 4.8% decline from August reading and the lowest reading since May. The headline consumer sentiment index is down by 21% from a year ago. Quote, consumers continue to note multiple vulnerabilities in the economy with rising risks to business conditions, labor markets, and inflation, Joanne Shu, director of Survey of Consumers, said in a statement. Likewise, consumers perceive risk to their pocketbooks as well. Current and expected personal finances both eased about 8% this month. Year-ahead inflation expectations of prices rising by 4.8% were unchanged from August, with consumers continuing to express anxiety about tariffs. Sue noted that 60% of respondents offered unprompted comments about levies during interviews. In a separate report on trade policy and consumer spending released last month, Sue also noted that the share of consumers expecting worse employment conditions in the year ahead was about 60%, a reading last seen in the Great Recession. Preliminary data for this month showed that this trend continued, with about 65% of consumers expecting higher employment in the next 12 months. The consumer survey results follow a spate of dour economic data in the past several days, including revisions to jobs data that showed payrolls declined by 13,000 in June, the first net loss since December 2020. Revisions to payroll data for the 12 months through March 2025, meanwhile, also showed that the U.S. employed 911,000 fewer people than it had initially reported, and a New York Fed survey out Monday showed respondents' perceived probability of landing a job after losing their current position at a record low in data going back to June 2013. Inflation data was released Thursday, also showed that the CPI increased by 2.9% on an annual basis in August. Of course, the core was even higher. Switching to company-specific news, Amazon's AWS CEO, we're building the building blocks of AI. Amazon's AWS is still a dominant player in the cloud wars, but its slower growth has some investors sitting on the sidelines. We're in the very early stages, but there's such enormous promise in technology, AWS CEO said on Yahoo Finance. Garman added that AWS is still in the early stages of building the building blocks that we think startups, enterprises, and government agencies are really going to want to use to build both AI applications as well as agentic workflows. Amazon stock has gained 4.5% in 2025, underperforming the S&P 500's 12% gain. AWS remains the company's profit engine and a key driver of its valuation, but investors are debating whether it can keep up with Microsoft Azure's growth, which surged last year on the back of its OpenAI partnership. In Q2, AWS revenue jumped 17.5% year over year to $30.9 billion, beating estimates of $30.8 billion, according to Bloomberg data. Azure's revenue soared 39%, so more than double the pace of the growth to $29.9 billion, almost about to cross AWS, above expectations of $28.92 billion. Meanwhile, Google Cloud grew 32% to $13.6 billion, surpassing estimates of $13.1 billion. Wow, that's amazing. Morgan Stanley's Brian Nowak sees reason for optimism. In a note to clients, he highlighted AWS partnerships with Anthropic, including strong demand for generative AI and traditional workloads as potential growth drivers. Upcoming data center capacity growth could translate into 20% plus AWS revenue growth in 2026. Nowak wrote, adding that the new capacity could lift revenue growth beyond the mid-teen pace AWS has seen recently. He added that in order for these workloads and revenue to flow, AWS still has to work through capacity constraints, including data center builds, delivery of chips, racks, cables, and power. The firm's analysis suggests the company is successfully working through data center build-out bottlenecks. Nowak raised his price tag on Amazon to $300 with a bull case to $350. Still, challenges remain for AWS as expectations rise along with higher capital expenditures, which is set to jump sharply in 2025 and 2026. Garmin framed growth as more than just money, saying it's not about the investment, which is very large, but it's also about that innovation that comes with it. Some analysts warn that AWS faces capacity constraints, rising costs, growing competition from Azure, Cloud, and Oracle. Winning depends on how well providers combine specialized hardware, partnerships, and software. For AWS, it remains to be seen whether its investments can drive unique AI offerings that keep customers locked in. On the other hand, Supermicro stock rises on news of product shipments using NVIDIA Blackwell chips. Supermicro Computer said it was now shipping products that use NVIDIA's high-speed Blackwell semiconductor for use in AI applications. The computer hardware maker explained that the combination gives customers optimized AI performance. CEO said Supermicro has the best track record in deploying NVIDIA technologies. We're going to skip after that summary. Electric article, U.S. EV sales smash records in August as Tesla loses ground. We're going to just read the summary on this one. U.S. EV sales reached a record high in August with 146,332 vehicles sold, accounting for 9.9% of total new car sales. While Tesla remains the market leader, its market share dropped to 38% due to increased competition and a lack of product innovation. The surge in EV sales is attributed to product innovation, motivated dealers, and the impending expiration of the federal EV tax credits. And let's read this article on Tesla. Tesla pivots to robots as investors question sales and soaring valuation. Elon Musk may be trying to pivot Tesla away from electric vehicles and toward human robots, but the skeptical investors, there's no hiding from seeing stagnating sales and eye-watering stock market valuation that leaves little room for error. Eager to transfer the car maker into an AI powerhouse, Musk earlier this month declared on his social media platform X that about 80% of Tesla's value will be optimized. I'm not going to read this bullshit. All right. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.